Thanks for joining us. It's been really exciting, the group of us working in the back end to bring this together. So on behalf of the group, welcome to the first inaugural Northeast InsurTech Week. It's a 5-day summit bringing everyone together from across all sides of the insurance sector. And we believe that the diversity of ideas, of voices, they drive greater perspective. And we think that greater perspective is leading to greater outcomes. And with the sum greater than the whole of the parts. It's important for us to bring you all here, different perspectives, rating agencies, regulators, startups, founders. It's an interesting group of individuals, and I think this week is going to bring some insight that is going to open eyes and kind of bring forth the industry in different ways. So thank you all for joining here. And some of you may be wondering, we've gotten some questions on our end, how did this come about? I guess you can say it's InsurTech's response to forming a pop band. Get a lot of people together who do really great things and form an alliance around it. So I think we're going to put, Charlie on lead guitar and see what happens. But, TBD on that. But today we wanted to bring together a panel discussion talking about innovation during stressful times. As we've just heard from folks from across the world, it's an interesting time to be alive, but be in business, and how it's affecting all of us in different ways, supply chains, everything down to, who's making our coffee for us these days. So we wanted to bring together industry experts with different perspectives. So today we have representation from AM Best, Fitch, New York DFS, the Connecticut Insurance Department, Connecticut Insurance and Financial Services, and our very own Nassau. So at this time, I'd like to introduce Gus Cheliotis. He is the co-founder of Nassau, general counsel and COO. A little bit about Gus. Before Nassau, he helped Phil lead the turnaround of Fidelity and Guarantee Life, taking it public in 2013. He's worked in various roles on Wall Street. And when he's not hitting the gym, he can be spotted leaving piles of books around the office. So what's great about Gus is he's very forward-thinking, very innovative thought leadership. And we wanted to bring him here today to introduce himself to all of you and talk a little bit about what Nassau has been doing and what we will be doing going forward. So at this time, we will spotlight Gus and let him take the virtual stage.
Great, thanks, Laura. It's true about the books. I think I have an addiction where, like, if I find a good book, I just buy 50 copies, and I feel like I have to give it to every single person that I come across. So I'm working on it. Thanks everyone for joining on a Monday morning. I just wanted to talk briefly about Nassau and how Reimagine fits in with our company. As an organization, we have certain values and themes that we all rally around, and one of those is extreme ownership and being dynamic, innovative, and forward thinking. Obviously you all know Paul Tyler. He's someone who embodies all those values, and I've referenced Paul and said he's like a nuclear power plant, because power plants don't have energy, they create them. And that's what Paul does with this program. We are excited to grow the program, to participate in InsurTech and in the future. And also, one of the things that as we look ahead, is just balancing, our enthusiasm with other principles. There's 3 of them: is fanatic discipline, empirical creativity, which is do your homework, validate your own ideas directly, don't follow the herd mentality. And 3 is productive paranoia, be prepared for a long winter. And these are concepts that, we wouldn't take credit for, as some of you who know me appreciate. I'm a big Jim Collins fan. These are concepts that he's created throughout his career in his books. Most notable is Good to Great, but I want to just touch briefly on his book, Great by Choice. It's an excellent book to read during these times around the pandemic and all the associated repercussions. Great by Choice. He took his team of 20 researchers and they studied the performance of 20,000 public companies over a 3-decade long period to figure out what distinguishes the companies that can perform in turbulent times. And out of those 20,000, they called it down to 7 companies. 7 companies that demonstrated extraordinary performance in extreme markets. 7 companies that not only survived, but actually thrived repeatedly through volatile markets. And so highly recommend going through that book and seeing what you can take out of it generally. But one of the concepts that I like from that book is the 20-mile march, or if you're Lawrence, the 50-kilometer ski, cross-country ski through the snow, but that's part of another segment. So basically the 20-mile march, the metaphor is you start on the west coast of the United States, and the goal is to go from San Diego to Maine. And, you know, it's not just about the distance, it's how you approach that distance. And you have to have the discipline to push through the difficult weather, but also the discipline to hold back in fair weather. And, you know, in the book, Jim Collins shows that it's without question the companies that just steadily take their 20-mile march that thrive, as opposed to other companies which may be able to pull off 40 or 50-day miles with enthusiasm, but end up coming short when challenges arise because they lack discipline or they didn't foresee how difficult things would get. So for us, you know, Nassau Reimagine is an opportunity to talk about challenges, to talk about you know, what faces us as an industry, you know, and the opportunities that may arise as a result. We see, you know, massive focus now and investment from private equity, from Silicon Valley types backing disruption efforts in InsurTech. You know, I've recently heard someone say that InsurTech is the last major sector to not have tech disruption, with tens, hundreds of billions of dollars, you know, at stake. Our goal here at Nassau and with Reimagine, and with you all, hopefully, is to help lead the way and proactively reimagining how the industry might look and entering into the new ways of doing business, particularly now where the traditional way of selling a life insurance product has been challenged, where you don't have the local seminar, you don't have the you know, the dinner, the steak dinner, or whatever, however the traditional way of selling an annuity is. So for us, the opportunity is ripe. And we feel we're in the right place at the right time with you all, you know, as our partners to think of ways that we can innovate. So thank you for participating, and we're looking forward to the discussions.
Hey, thanks so much, Gus.
Thank you.
Thank you. At this time, I'd like to introduce a friend of the industry, Susan Winkler. For those of you who do not know Susan, you should. But Susan comes to us from Connecticut Insurance and Financial Services. She's the executive director, and she's also a vice president at Metro Hartford Alliance. She's bringing to us today industry experience and an economic development perspective. So Susan will be taking the virtual stage now and introducing us all to the panel.
Thank you. Thank you, Laura. Thank you, Paul. Thank you, Gus, for allowing me to moderate the panel today. And let me just take a step back and talk about what Gus just mentioned and relayed. Thank you for being a leader in insurance and InsurTech, because so often the insurance industry is kind of beneath the covers, and it's the institutional industry that no one seems to say is innovative. And with a leader like you and with Nassau at the helm, we can showcase exactly where the industry is going. So thank you for that, because it is innovative, it is growing, and it is not immune to all the challenges that are happening right now. And that's kind of what we're going to talk about today. I wanted to start off with first just some stats, again, because I wanted to show the richness and the breadth and depth of the industry of innovation here in the insurance capital of the world. You know, I might say that a couple times, Laura. These stats are provided from the Hartford InsurTech Hub, but I wanted to give some depth. There's just a few. To date, in the last 3 years, let's just say, we've invested $59 million of private investment in this market, in the insurance capital for InsurTech and innovation. 31 startups have graduated from our program, from our accelerator here. And of those 31, 61% of those 31 are from out of the country, out of the US. And our innovation efforts have touched over 151 countries at this point. So we have a strong foundation of innovation in the insurance capital. But we're going to go talk about the future, where we're going. You know, what has happened with the pandemic? What does that mean about driving innovation in emerging technologies? And what is that new pace of acceleration of innovation and change, despite some pressures of interest rates and other global pressures and US pressures? What does that mean for the insurance industry going forward? So I'd like to introduce the panel of rating agencies or regulators. As an industry rep, it's very interesting for me not to moderate a panel of industry experts from the industry, from the insurance carriers. But I'm very, very happy and pleased to present Gerry Glombicki. He's Director of Fitch Ratings. Good morning.
Good morning.
Josh Hershman, Deputy Commissioner of the Department of Insurance. Good morning, Josh.
Morning.
Matt Comer, Executive Deputy Superintendent from the New York Department of Financial Services. Good morning, Matt.
Morning.
And Ed Kohlberg, Director at AM Best. Good morning.
Morning.
All right, so let's get into this. My first question is really for the entire panel, but I'm not going to single out anybody unless someone doesn't raise their hand and start talking. But here we are. The biggest challenge, what do we have right now that's going to have the most impact on emerging technologies? What would you consider that biggest challenge? We could say it's the pandemic. I'll throw some other. Is it cyber? Is it regulatory pressures? Is it the customer itself? What is driving right now? What is the challenge that's also driving opportunity in the insurance industry? And we're going to stay here for a while, so I'd like to give everybody a chance to talk about this because it's driving the entire conversation. So who would like to start off with that conversation?
Yeah,
I mean, go ahead.
Well, I mean, one of the challenges is keeping up with change, right? The industry, you know, you made a comment, you know, that sometimes insurance isn't thought as the most innovative, you know, line of business. But I think the industry has done a lot in the past 2 or 3 years to catch up. And the industry is really being tested today, maybe sooner than they thought they would have to be tested. You know, companies have had to put in systems and had to have, you know, technology in place to work remotely and to get their distribution working remotely, to have their systems set up and their policies and procedures set up as well. But I think it's going to continue to change, right? The industry shouldn't get complacent that, you know, they're in a spot right now where their technology is working, their innovation is working. I think innovation is going to continue to change, and to keep up with that pace of change is going to be one of the challenges.
Anybody else? Is there a certain sector that's going to take the lead? Is it the health? Is it life? Is it property casualty? Someone want to talk about that? Yeah. Josh, like you want to say something.
Go ahead. Okay, yeah. So I agree completely that this pandemic is the driver of a lot of change right now. And the idea that might not be things that wanted to be implemented today, but are being implemented today is important, because I think you're seeing a lot of success, and you're seeing it from all the lines of business. I mean, at the insurance department, we're seeing more filings related to accelerated underwriting for life products, because it's hard to go to the doctor. And although we're not approving this stuff without figuring out whether it doesn't have an impact on any of the statutes or regulations that are in place, it's important that the companies are thinking about how to get there. So I think we're seeing it, and it's just going to be more and more. And if it's something that we thought we were going to see in 2 or 3 years, we're seeing it today, and it's because of the pandemic.
And Josh, is there one sector you think that's going to drive the technology changes faster than the other? Or they could all be, again, universally all driving towards that same goal?
I think P&C is driving a little bit more right now, in my opinion, just because health has so much catching up to do, and they've got so much more on their plate to some extent. And then in other areas where, you know, elective surgeries isn't really on their plate right now, but it's a very complicated process right now for the health, because who knows what the impact of COVID-19 is going to be in 6 months from now, in 2 months, or in 2 years, what the long lasting effects are going to be on individuals who have severe cases.
I was going to add to that. Health insurance is a little bit interesting in the sense that I think they almost have too much innovation. In particular, people are using wearables, all these devices that aren't necessarily tested or scientifically tested to a degree of accuracy, and people are giving their doctors results that they don't necessarily know or can understand type stuff. So there's a problem with almost too much innovation too. There's this right balance that you have to kind of strike. So I think actually the health sector in particular is getting almost too much data thrown at it right now. I think particularly when you look at the P&C sector, I think they were always kind of the leader in terms of innovations, you know, in terms of their underwriting. Let's take credit scoring, for example. Credit scoring was used back in the 1990s, and there was a little bit of dynamic there, whether you can use it or not, with the regulators versus the insurance companies type stuff. That's an area where you're just trying to see, at the end of the day, innovation is meant to do a few things. It's to increase sales or increase efficiency. We'll talk about this later here, but really at the end of the day, it has to be seen in the financial statements. If you can't show it to me in the financial statements, you can call yourself innovative all you want to. It's not working. The question becomes, though, is how can you make it work till it shows? Is it a time question? You can be innovative, but you have to go through the things. And when you have crises like a pandemic, it's those companies who can thrive now who will show the value and add the value.
Matt, do you want to comment a little bit on this? Before we move on, I want to make sure I get everybody's perspective.
Yeah, sure. And I hope I'm having some connection issues, so hopefully everyone can hear me fine. But no, I mean, I would agree what's been said. I mean, I think that the COVID-19 situation and the transition to a new normal is a huge driver of innovation. I think, you know, all the way from kind of the underwriting and onboarding side of things through the claims process. I mean, at DFS, for example, you know, we're looking at how we can facilitate inspections related to auto sales and related insurance where technology may help, obviate the need for physical interaction with an inspector. I think we've talked about health insurance and telehealth, which I see as a huge opportunity. And then we've touched, I think, briefly on algorithmic underwriting, which is something we've been focused on even prior to COVID-19. But I think in the context of COVID-19 and delivering services in a remote fashion, you're seeing continued and sustained focus on that area, which I think there's real potential benefit for insurers and consumers there. But obviously there's also, I think, some potential risks there that have to be worked through.
So I think it was Gerry that mentioned innovation needing to be scored, but I'm going to actually throw the question over at Ed, because AM Best put together a score for innovation for the insurance industry. And your top score is an innovation leader. It's a numeric score. It's pretty detailed. It's also on input as well as output. So the insurer is based on innovation inside, and then out, what is the output of innovation for the customer, as well as what is the internal structure of innovation. And that's how they're judged. I was wondering if you could give everybody listening a little glimpse onto that innovation score, since you're actually measuring it.
No, of course. Yeah, and Gerry made some good points, right, about the output, right? So we need to see the results, and oftentimes that kind of lags, right? That comes later. We on the inputs, we're looking at things like culture, resources, and then on the output, it's what are the results? Is it coming through on the financial statements? We use the word innovation very broadly, and that's kind of on purpose in our criteria. It's not a one size fits all for all sorts of companies. We rate you know, a lot of different companies at AM Best, not just public companies, right? We rate mutual, small fraternal companies, private companies, and not every company has the resources available, you know, to drop $2 billion on purchasing, you know, an innovation organization or to do it internally, right? So it has to make sense for that organization. But we put through this innovation criteria to make sure that the analysts, when they're doing their ratings, are looking at all these things and capturing them within the rating and analysis that they're doing. So I think by scoring it, what that's doing is it's forcing the analysts to kind of look at these things and ask these questions at a minimum. Our score is not public. It's used internally. So, you know, I think whether another agency does scoring or not, in their head, they're kind of scoring it, right? They're assessing, they're making an opinion on it. We're doing the same thing. We're just laying it out numerically, that opinion. And so that's why we kind of rolled out the innovation criteria. So far, it's been working very well, and it's spurred some great conversations with companies and some great conversations internally amongst AM Best.
So isn't it a customer scoring innovation anyway? I mean, we're all doing that. You know, as we
Right.
score a company, anything we purchase, we're kind of scoring the company as it relates to how they're introducing their product, how they're touching us, how they're engaging us. We score, maybe not numerically, but we're certainly scoring a company whether or not we're going to purchase that policy or going to purchase that cup of coffee, as Laura said earlier.
Sure.
It's all about scoring. I'd love to get Gerry's perspective on the other side. Gerry, you had mentioned, is it even possible to score innovation?
I don't think it is. I mean, innovation is an intangible asset, and you can try to measure that as many ways you can. I'm an accountant by nature, and I can look at income statements, I can look at balance sheets. I can't tell you what the value of your intangible asset is if you're Coke or if you're Apple, or if you're an innovator in the insurance field. But now that said, I think as I mentioned, it's important to be innovative, though. You know, you have to do it, but to actually say you can quantify it, I think is very difficult, if not impossible to do. I kind of just threw up some stats here, interestingly enough. I was kind of hoping for the football season to be happening here soon. And there's been 83 years that they've done the NFL drafts for now. And these numbers actually work out very well for me here, that's why I'm saying the stat as well. So only 14 of those 83 drafts in the first round are in the Hall of Fame. That's 83% failure rate in terms of assessing talent by these people who are actually very good and the best at what they can do for it. And the point is, everyone wants to be innovative. Everyone says the right thing, but at the end of the day, you have to be able to measure it. And the way we measure it is very simple. We look at the financial statements. If you spend $5 million to save $1 million, you could be innovative, but you did it inefficiently. You have to be able to show this through success in the financial statements. And if you can't show it in the financial statements, you can call yourself innovative all you want to. It's just not happening.
Any other comments on this? This is kind of very important as we talk about innovation going forward. Innovation is you know, how do you really manage that? How do you manage that? How do
you have to be able to manage failure, right? Just like the NFL draft, there was a lot of failures. The insurance industry is not used to failing, right? We're used to everything being measured and predictable, but Gerry's right. The companies are throwing a lot of money at innovation, and a lot of it's not going to work. And that's a new concept for the insurance industry.
So anybody else want to comment on it before because I'm going to.
Yeah, I mean, I would just say really quickly, I mean, I think that, you know, more broad than even just the specific sector. I mean, I think as a society, as we look at the innovation efforts that are occurring in the financial services space, I think we also need to, and we think about the effectiveness of them. I think we also need to think about, you know, whether they're truly benefiting the lives of consumers, and particularly those who are often left out, right, from kind of the mainstream. And I think that that's a very important thing that at least at NYDFS, I think we're thinking about and will be focused on is, you know, how do we ensure that even kind of the most vulnerable and marginalized in society can benefit from the innovation that's occurring within this space.
And I'd say that's probably pretty universal for the insurers as well at this point, looking forward and making sure it's more inclusive in any way, and products and services as well.
I was going to say one other thing too is just, I think this was mentioned earlier, is that insurance is kind of one of the last industries to actually have innovation touch it. But insurance is very unique. You literally have 50 different regulators if you write throughout the states, as opposed to many other industries that don't have regulators or very lightly regulated type stuff. So it's an interesting dynamic, I think, when you have these regulators here on the call here, because innovation and regulation aren't necessarily against each other, but they have to necessarily work together to actually really cause stuff to go forward.
Well, Josh, you want to talk a little bit about that, because that's an interesting point. Commissioner Andrew Mace, Connecticut's Commissioner on Insurance, and Deputy Commissioner Josh Hershman created a council on the Council on Technology, Advisory Council on Technology, made out of industry leaders and industry reps. Talk a little bit about that, Josh. I'm trying to marry regulation and innovation together inside the department.
Yeah, Connecticut is definitely trying to help innovation in the industry. We recognize, and New York, Matt can speak for hours, I'm sure, about New York's position on this, and which is very similar to Connecticut's. And we're just trying. We recognize that we're at the beginning of innovation in insurance, and this is Commissioner Mays' top priority. I don't want to speak for Commissioner Wade, but I'm sure it was her top priority as well. This has been building and building, and it's important for regulators to have their doors open to innovation and not slow down the process. Gerry's right. There are 6 jurisdictions that companies have to deal with, and each chief regulator in those jurisdictions, or each form filing chief regulator in those jurisdictions, are going to have different opinions. And to get everyone on the same page is very hard, but in Connecticut, we're at least trying to bring all the stakeholders together to have a conversation and make sure that the industry can, get their innovative products through, and while being helpful for the consumer and protecting the consumer.
Matt, you want to mention New York's
sure.
New progress on this?
Yeah, and I think just by way of background too, and at least for New York, our regulatory mandate, I think, is broader than people initially understand. So our mandate includes an economic development mandate. It includes a jobs creation mandate. It includes a regulatory modernization mandate. So we're very supportive of innovation in the space, and want to see innovation, and of course want to see New York as sort of a center for that innovation. I joined the agency about a year ago to start our innovation activities, and the first program we launched was focused on the InsurTech space, because I genuinely believe there's so much opportunity there. So we ran a pilot program earlier this year called Project Whitehall that we recently expanded to include all sectors related to DFS jurisdiction, which is called DFS Fast Forward. And it's basically an open door, so to really level the playing field and make it possible for innovators to come in and have a conversation with us. And there are really kind of 2 big objectives that it's been accomplishing. I think one is making it easier for innovators to meet with us, to get answers to their questions, to understand our requirements. But perhaps more importantly for the growth of the sector, it's really been a tool to educate us and to help us understand, where the industry, where regulatory change could be needed in the future, and where we need to work together to build the type of the set of products and services we want consumers to have. So I think in New York, we're very supportive, and we want to hear from innovators, and we want to work with you to bring products to market that benefit people in New York.
I'll speak on the insurance industry on that note too. Thank you for that, for the innovation. You got some depth of insight there for both the regulatory departments. But in the insurance industry itself, a recent report published by CTIFS and PwC, the Insurance Market Brief, cited that most insurers have developed labs, hubs, innovation centers inside their companies. So as much as they're supporting the accelerators on the outside or externally from their companies, each one of the companies have now invested inside the companies themselves in InsurTech. And I will also say that in a recent survey, from CTIFS for its board of directors in the industry in the insurance capital in Connecticut, over 70% responded and said, we are going to keep InsurTech as a strategic priority going forward. And then an additional 70% said that we're going to fund that. So this is a real critical, important part of the prioritization of product, services, distribution, everything that makes up an insurance industry. But I appreciate the glimpse inside innovation, in the culture of innovation in New York and in the regulatory department of Connecticut, Hartford. What about the rating agencies? How are you guys developing a culture of innovation inside?
Yeah, I mean, at AM Best, our leadership has created a culture of, if you have an idea, right, roll with it. You could be responsible in rolling it out and developing it. You know, we don't just rate companies as part of our jobs. As part of our jobs is to create tools to do things better, to improve a process, to improve the way that we're looking at a company. So the leadership at AM Best has helped to facilitate that, and you know, everybody works in work groups together. It's very collaborative. I think a collaborative environment creates an innovative environment. When you get people working together and talking together, you know, you come up with new ideas. And again, this word innovation, this industry has taken it as the buzzword, but it's broad. You know, you innovation is rare, right? So at some point, you know, and going back to the industry, not just within AM Best, a company, you know, doing automation, that doesn't become innovative anymore. That's where you have to go to do business, right? So that was my comment about the challenges, is being forward thinking, be able to pivot and change quickly, because the way you're doing automation today in 2 years could be, you know, different. It could be wrong. I don't know if you remember back in the day, you know, when it was Blu-ray versus HD DVDs, you know, it's almost like the industry is going to be there where, you know, everybody's on different systems. Which one is the one that you need to move to and go to? You know, the innovation within the industry kind of started because it's a mature marketplace in the U.S., at least on the life side. Getting new sales is a challenge. Penetrating the middle market, the underserved middle market, is a challenge. So the companies, you know, tried to think of innovative ways to do that. That innovation is kind of used differently. It's how you have to do business. So it's kind of changed what innovation is being used for. And I don't think it's really generating new sales per se. I don't think it's going to be generating, you know, 5 to 10% new life insurance sales. It's going to, you have to innovate to get that 2-3% sales growth.
Gerry, I just want to give you an opportunity to
Thank
talk
you.
about this.
So yeah, one of the things people might not notice actually is that insurance, we are actually regulated ourselves, rating agencies, by various jurisdictions. So the SEC here in the US, IOSCO internationally type stuff. So when we actually do our ratings, we have to do what our criteria says. So we can't really be creative outside of the boundaries of our criteria, otherwise we'll get in trouble. But that doesn't mean we can't be creative. Particularly you see in our special reports, the questions that we ask, the things that we're talking about, that type of stuff. But to actually be creative for creative sakes within the rating confines itself is a little bit difficult, because again, you have to follow what you actually do in your criteria.
Yeah, I appreciate the inside of both of those areas, the regulation and the rating agents, because you are supporting the industry, and the industry is going at the speed of sound at this moment. So to keep up with that is important, and it's great to see the insight of both of those supportive roles also being part of the innovation process. That's important. So question on going forward with, let's just say, industry partnerships. How do you build the relationships? We have a lot of startups, I think, listening in today. How do you foster relationships with the startups? And I'm going to start with the regulators on this, and I'll start with you, Matt, if you don't mind. Going forward, how are you connecting? You talked a little bit about it already, but maybe go into a little bit more depth about what you're doing with Fast Forward and others initiatives.
Yeah, sure, absolutely. I mean, I think that, you know, I think every regulator is sort of in a different place, but I think that, I think for us, really, it starts with just having an open door and having a conversation and building trust. And I think that's really what DFS Fast Forward is about. I mean, it's about, providing that open door, providing an opportunity to have a conversation, and seeing where that leads. I think that some conversations may not lead anywhere. Some conversations may lead us to realize that, wow, we really need to kind of update some aspect of our regulation, our regulatory approach, or some conversations we may decide that this product really could have a huge impact on for New Yorkers in the context of COVID-19, and we need to fast forward that or accelerate the bringing that to market. But I think it really starts with having kind of that open door and having the conversation and the dialogue.
Josh?
Yeah, Matt's right. I mean, at least once or twice a week, I'm having a conversation with an InsurTech. I mean, Hartford is really the capital of the insurance world, and we see it with InsurTech. We see it with big insurance. And we at the Connecticut Insurance Department are trying to get in front of as many InsurTechs as we can. We go to as many of the incubator programs that are put on that we can, and we're going to continue to do that because it's growth for the insurance industry, which is at the end of the day growth for the consumer and more protection for the consumer, and that's our mission. So we're excited to continue this conversation.
Ed and Gerry, do you have anything to comment on the?
The other thing I would add, and I think Ed kind of mentioned this a little bit earlier here, is, I mean, when you talk about innovation, there's going to be a lot of failures. The biggest thing is to be kind of persistent, to keep trying type stuff, and eventually things will lead to it. But at the end of the day, it has to be somewhat measurable.
Are you connecting with any InsurTechs in the rating agencies? Are you looking beyond your walls to look for technology solutions and bring them in? I guess maybe.
At Fitch, I can speak for, I think Ed can speak for the best side there, but again, we are independent. We're not trying to foster any relationships. We're not there to try to create relationships there. But that said, that doesn't mean we're not there trying to understand relationships. We can certainly have conversations with InsurTechs to kind of see what they're doing to the industry, to help the industry as a whole.
Are you doing that? Is that
absolutely?
Part of your...
I'll pick on the Blockchain Alliance, for example. That's a very hot topic these days to talk about there. But one of the ways to kind of tackle blockchain is you can do it by yourself, or you can do it in the form of a group. So we do talk to the Blockchain Alliance. We talk to things. We understand the ideas behind it. We understand the costs and the benefits of it, and certainly that technology in particular, it's beneficial. The more people that are on it, the more beneficial that technology becomes.
That's a great example. I appreciate you bringing in the Blockchain Alliance and what we're doing there, even in Connecticut, to bring in that knowledge of blockchain to the larger masses. And so you, as the rating agency, understand that more. So thank you for your participation there as well. Ed, anything on the rating side?
Yeah, I mean, we're independent. We're not within the industry, but we follow what's going on in the industry.
Yep.
Yeah, we know back when the world was opened, there were a lot of conferences, especially on the West Coast, Las Vegas, big conferences. But how do companies kind of network now? Certainly it's different. I'm sure a lot of companies are still meeting via, Zoom meetings, just like this one. It's kind of incredible what we're still able to accomplish. When I think about it, when this first kind of went down in March, I was thinking, wow, well, if this was the 80s and we didn't have this technology, we'd be in a whole different, ball game as far as. We got to be thankful for the communication technologies, which is innovation, right? At some point, that was innovation.
Yep.
So how do you build, continue innovation and continue momentum? That's been going on. I think it's just continued communication. Companies need to still be talking to each other. I know at AM Best we're still putting out special reports. We're still doing, webcasts to share our expertise that we gain. And companies, it's important to focus on innovation because it's not going away. You need to continue to see what's going on in the marketplace.
How long do you think this virtual environment, I mean, here we are today. I mean, the virtual environment, I don't even think we would have had this conversation if it wasn't for We probably have waited to Vegas at InsurTech Connect, which is now going virtual as well. So I appreciate you bringing up the kind of virtual nature of everything, and this is why we're here today in virtual Northeast InsurTech Week. Do you think that's going to prevail, and for how long?
For now, it will, until people feel safe. I think people want to still connect in person. It's nice to have a nice commute, but it's also good to be in the office and be able to focus a little better. That's my opinion. I have 2 young children at home. I have a 3-year-old and 5-year-old. So it's nice to get into the office and be a little bit more focused. I think everybody wants to connect in person, at least I do. So this will prevail to keep us safe. And I think that's the most important thing, is everybody stays safe. And once the world is safe, I think we should all, connect in person.
Panelists, what do you guys think, the other panelists? I mean, is this virtual environment the new environment? How long is this the place we're going to drive innovation from, a virtual environment? What does that look like? How long is that going to last?
I certainly can't handicap how long it's going to last. I don't have that level of expertise for that, to be honest with you. But I can tell you it's the new normal for right now, and you have to be able to thrive in it. The biggest thing about this is you have to be change and adapt. And this is the environment that we're in. And the people who will succeed in this environment are the people who can succeed in any environment.
Gerry, I'm so glad you're on the panel, because usually I have an actuary on the panel, and now I have an accountant, and it's great. So
I'll take that as a compliment.
That's not possible, Susan. Nope, it's not happening. So I appreciate that perspective. Anybody else?
No, I think others have said it perfectly. I think it's really impossible to know how long the new normal will last. However, I do think, I do wonder. I guess I don't know for sure, but I do think that consumer preferences may be sort of permanently changed in some ways as a result of this. I think that you will see a strong preference toward more remote, and entirely digital services and products and things of that nature. So I think it's hard to know kind of what the world will look like after this, but I think we'll be in a new normal for an extended period of time, and certainly at least until there's a vaccine, and until that vaccine has been manufactured so that anyone can get the vaccine, which will probably unfortunately be some period of time. So I think that the impact will probably be long lasting, and I think if one of the results of that is that we're able to transform the industry in a way that's good for consumers, I think at least that will be something positive we can make happen from the situation.
Yeah, I'll just be real quick. I think that before this pandemic, if I couldn't purchase something or go somewhere where I could not necessarily be so close to people, I was happy. So I think that this might be jumping forward a few years, and I could envision this being a more permanent solution. I think younger generations are much more comfortable with telecommuting and talking over over Zoom or whatever of the 10 different types of meeting softwares that exist. I think that it'll save money for companies, and we'll have to see what it looks like. But at the end of the day, I do think that this is something that will be happening in the next 5, 10, 15 years, even after we come back to get person.
For right now, though, future of work, the acceleration has changed so dramatically. In your opinion, where would that focus be the strongest in the new way we're going to work? Let's say, the next 6 months to a year, if we had to pinpoint an emerging technology that's going to help us with the acceleration and the pace of work and where we're changed and how we're changed, because that goes across everything. Everything from digital, from where we're buying our products, to our telemedicine, our teledocs, our cybersecurity, our virtual workspace at home. Where is this, or is it completely across the board? I'd love everybody's opinion on, You know, I look at all three sectors and each one has a prioritization right now of so many things. Just curious of what your perspective is for the audience of where's that driver?
I'll say 5G and infrastructure is the most important, you know, next step.
That's the focus. Okay. But you're probably right about that.
I would say just be able to network and connect. That's really the thing, because I mean that's ultimately what we're talking about here. At the end of the day, you know, we're having a meeting right now via networking and connecting. You know, when you talk to purchasing your stuff through Amazon or through Walmart or whatever, you know, that's actually connecting the point as well. So to be able to connect to people, that is really the technology that underpins it. You know, you can have the different, and at least 10 different, you know, Zoom type meeting type stuff, you know, that type stuff. So there's all of that stuff, but at the end of the day, it's connecting to the customer, connecting to the client, connecting to each other in terms of your workplace. That's what's the most important thing that can facilitate the best.
Ed and Gerry, anything that you would say is going to be the focus of those emerging technologies?
I think it's going to be about convenience, and that's been the driving force with technology recently. And I'm going to use that, so easy to use it, the Amazon example. Could buy something in 2 clicks. I always buy things on Amazon just because I don't have to log in. It's just buy now, boom, done. I mean, buying insurance products, the consumer expects it to be that easy. That's a high hurdle, but you know that's where I think technology and innovation is going. It's just convenience for consumers.
So are we going to lose the customer though? I mean, is it efficiency and speed and gratification, or is it important? And I'm just throwing this out. Is the customer just as important in the relationship of that customer?
Yes, because again, Amazon didn't lose the customer focus, right? You could still call them, and whenever I call Amazon, I'm never waiting. You know, I speak to somebody right away. My package didn't come, or my package came and it was open and the item's gone. This just happened to me this week. Oh, we're sending another one. Don't worry. It's the quickest conversation I've ever had with a company. I try calling Comcast or Verizon, not to throw any other organization under the bus.
Not to mention anything. But...
And I come off the phone, aggravated. And returns with Amazon, I could just drop something off at UPS store without a box and they'll take care of it for me. That's what the consumer expects nowadays, that kind of customer service.
Yeah, real quickly, 10 o'clock, I'm going to go lightning. This is my lightning round. Harry, Monty from Symetra's on. We were going to just do a quick shout out. Harry, more to come. Thank you so much for the sponsorship of our program this year. We look forward to having you and your team on this crazy adventure we're on. Number 2, thank you to everybody, who helped us organize this event. Pull the group of distinguished panelists together. Thanks. That was some people on our team, some people externally, Diana Paquette especially. Thank you, Susan Winkler, great moderation. All of our panelists, thank you so much. We appreciate the time you took out of your day to do this. More importantly, thanks all of you for coming and joining us and actually being an active participant. And if you like this here, there's more this week. Okay, Jen, Charlie, Tony Liu, Stacy Brown, all have great programs. Little different time. We had to adjust this for people's calendars here to do it earlier. Most of them I think are later on. Go to the Eventbrite. We'll put it on and come visit us, join us, and participate the rest of this week. Laura, what else?
That is it. Thank you all so much for joining us at 10:01. Enjoy your Monday morning. We hope we did something innovative here and that you can bring it forth into your rest of your day.
Thank you, everybody.